Welcome to Mr. Trading Lab. Today I want to take you into one of the most misunderstood, underrated, and avoided concepts in trading. A concept that every beginner steps over because they think it is too simple. A concept professional traders quietly use while retail traders loudly chase 1, 5 and 1, 10 trades and then blow accounts. Today I want to reveal the hidden power of the one risk-reward trade, and why it can transform the way you trade, the way you think, and the way you grow a funded account or even a small personal capital account. This is not a motivational talk. This is not a strategy built on dreams. This is a reality-based explanation backed by logic, math, consistency, and trader psychology. My goal today is to give you clarity, not hype, not fantasy, just pure understanding that will make you say, "Why did nobody tell me this earlier?" And that is exactly why the title of today's topic is The Hidden Power of One trades nobody talks about. So sit back, take a breath, forget everything you think you know about risk-reward ratios, and let's start from the foundation. Introduction: Why one trades are ignored. When you start trading, the first thing the trading world throws at you is this idea that your RR must be 1.3 or 1.4 or 1.5. Every influencer tells you that unless your trades are huge RRs, you will never make money. Every strategy claims it gives 110 moves, and every beginner becomes obsessed with catching big runners. This creates a dangerous mental trap. You start believing that small wins are useless. You start believing a one is cheap. You start believing you can only succeed if you catch big trends. You start believing you can ignore proper risk management because one big trade will save everything. And in this infinite chase for big reward trades, you completely ignore the real power and psychology behind a one trade. But here is the truth nobody talks about. Most professional traders do not trade 1.3 or 1.5 every day. Most smart prop firm passers do not chase 1.10 trades. Most consistently profitable traders rely heavily on controlled 1.1 setups. The reason is simple. Consistency beats intensity. Predictability beats randomness. Discipline beats hope. But saying this is not enough. You need examples, you need reality, you need logic, and that is exactly what you will get. Chapter 1. What actually is a one trade? A one trade means your take profit is equal to your stop loss. If you risk 50 pips, you aim for 50 pips. If you risk $100, you aim for $100. Many traders look at this and think, what's the point if I make the same as I risk? But what they don't understand is that trading is not a single event game. Trading is a long series of repeated decisions. Just like fitness is not one workout, trading is not one trade. The secret power of one only comes out when you look at probability, win rate, market structure, consistency, mental discipline, capital protection, prop firm rules, psychological comfort. Because a one makes one thing extremely easy. You do not need a high accuracy to grow. You just need something around 50% accuracy with proper discipline. The math works, the psychology works, the market behavior supports it, and most importantly, your mind doesn't panic. Chapter 2. The math behind one that nobody explains. Let's break it down. Suppose you take 10 trades. You win 5 and lose 5. You risk $100 per trade. 5 wins give you plus 500. 5 losses give you 500. You break even. No loss. No drama. No emotional damage. Now imagine you become just slightly good with your entries. Not a genius. Not a market wizard. Just slightly better. You win 6 trades out of 10. Now your numbers look like this. 6 wins plus 600. 4 losses equals 400. Net profit equals plus 200. You are profitable with only 60% accuracy. Now take a trader chasing 1-3 trades. They need almost 30 to 35% accuracy minimum to break even. But markets do not always give 1-3 clean moves. Most pairs and indices make one swings every day. 1-3 happens fewer times. 1-5 happens even fewer times. 1-10 is a rare event. And that is why most traders blow accounts. Their expectations are unrealistic. Their RRs are fantasy-based. Their winning trades rarely hit the take profit. Their losing trades hit stop-loss very fast. But a one trader enjoys the following advantages: more frequent wins, more confidence, less stress, less drawdown, better emotional control, stable growth. This is the hidden math nobody teaches. Chapter 3: Psychology is the real secret. Human mind loves stability. Human mind hates ambiguity. Human mind collapses under unrealistic pressure. When you aim for 1-5 or 1-10 daily, you unconsciously create pressure. Your brain thinks, I need a big move or I fail. But markets don't move like that every day. Markets breathe. Markets range. Markets retrace. That is why one trades fit human psychology. They are faster. They are cleaner. They are easier to execute. They reduce emotional fatigue. A trader using one feels mentally safe. The moment your mind is safe, your decision-making improves. Your fear reduces. Your hesitation decreases. Your discipline becomes stronger. Your consistency increases. And consistency is the mother of profits. Chapter 4: Why prop firms secretly favor one traders. Let's talk about funded accounts, because this is where reality becomes clearer. Prop firms have two goals: avoid traders who gamble. Find traders who manage risk with discipline. Do you know the biggest category of failed prop traders? People chasing huge RRs. People dreaming of flipping accounts. People who want 10 moves every other day. Prop firms know this behavior fails 95% of the time. But traders who rely on small and realistic targets like one stay calm. They complete phases faster. They avoid unnecessary drawdowns. They do not blow accounts with one single emotional decision. They trade with logic rather than hope. That is why if you go through passers' data in many firms, you will notice a common pattern. Small consistent wins. Small calculated losses. Low drawdown. 1-1 or 1-1-5 style trading. Prop firms love these traders because they are stable. They don't take random risks. They survive longer. They withdraw profits consistently. They follow rules better. And that is exactly why the hidden power of one matters for funded accounts. Chapter 5: How market structure actually supports one. Most markets give small swings frequently. Huge swings happen occasionally. Let's take gold as an example. Every session, gold moves 30-60 pips easily. To catch a move of 200-500 pips, you need perfect entries plus perfect market conditions plus patience. But reality is simple. Gold breathes sharply. Gold retraces aggressively. Gold respects zones for minutes, not for hours. So traders chasing 1-5 often see their trades go into profit and then reverse. But the same trade would have hit a 1 TP comfortably. Indices like NAS 100 and US 30 also move chaotically. They jump. They dump. They spike. They retrace. But short, predictable moves are always available. That's the sweet spot for one traders. Even Forex pairs respect one setups beautifully. Break entry test, order block taps, liquidity sweeps, support resistance flips, all these setups easily give one. And here's the point. Market structure naturally supports small wins more than big wins. The smart trader aligns with the market. The dreamer fights the market. Which one survives? Always the smart one. Chapter 6: The universal example that proves the power of one. Let me give you a real example you can relate to. Imagine you are trading a 5K funded account. Your max daily loss is 250. Your max total loss is 500. If you take one trades with 1% risk, you lose $50 per losing trade. You gain plus $50 per winning trade. Now imagine you have an average accuracy of 55%, just slightly better than a coin flip. In 20 trades, you win 11 equals plus 550. You lose 9 equals 450. Total profit equals. You grow. You stay safe. You stay consistent. But now imagine you chase 3. If you lose 3 trades in a row, which is extremely possible in news sessions, your drawdown becomes 150. One more loss and you're 200. Your mind panics. You reduce lot sizes. You skip entries. You break your strategy. You ruin your account. On the other hand, one traders recover quickly from drawdowns. They do not need a huge move. They just need the next clean setup. That is the hidden strength. Chapter 7. Why most beginners fail without knowing this. Beginners fail because they want to get rich fast. They want big moves. They want huge profits. They want instant success. They want unrealistic outcomes. This emotional hunger makes them believe one is for weak traders. But the truth is the opposite. One is for wise traders. One is for long-term traders. One is for disciplined traders. Every trader who eventually succeeds, whether in Forex, crypto, indices, or even options, eventually comes back to small, consistent, manageable setups. Even scalpers rely on one. Even day traders rely on one. Even swing traders sometimes exit at one during uncertain markets. The market knows who is greedy, and it punishes them. But the market also rewards those who respect probability. Chapter 8. The hidden psychological edge you get with one. Let's go deeper into the human mind. When you aim for one, your brain feels safe, relaxed, in control, focused, less stressed, less emotional. Your mind does not feel desperate. Your heart rate does not spike. Your palms do not sweat. Your decision-making stays clean. But when you aim for 1-5, your mind keeps whispering, don't close early. Hold tight. What if it reverses? What if news comes? What if price retraces sharply? You remain tense until your trade closes. And 90% of the time, you close early or price reverses. This emotional torture does not exist in one trading. Your trades close faster. Your dopamine cycle stays healthy. Your emotional fatigue reduces. Your psychological capital stays strong. And psychological capital is more important than financial capital. Chapter 9. How one creates a professional mindset. Professionals do not trade to look cool. They do not trade to show profits on Instagram. They do not trade for entertainment. They trade for sustainability. A sustainable trader does not rely on luck. They rely on repeatable patterns. And one is one of the most repeatable patterns. This creates a stable routine, clear decision-making, improved entries, better exits, dynamic adaptability. A trader who uses one learns market rhythm, market structure, timing, precision, discipline. And once you master discipline with one, you can always expand to 1, 2, or 3 when markets allow. But beginners do the opposite. They chase 5 without mastering 1. And this is like learning to run before learning to walk. It leads to falls. Painful falls. Chapter 10. Real-world example, the train story. Let me give you one of the best examples I use to explain one trades. Imagine a train station. Every few minutes, a small passenger train passes by. And and once in a while, maybe once every hour, a big goods train passes. Now imagine you are standing there waiting to cross the track. Will you wait for the rare big train to pass before crossing? Or will you cross after a small passenger train passes because it happens more often? Most people prefer crossing after the predictable small train because it is reliable, because it is consistent, because it is frequent, because it is safe. Market works the same way. Small predictable moves happen all the time. Big runs happen once in a while. A wise trader uses the frequent opportunities. A greedy trader waits endlessly for the rare ones. That is the hidden psychological advantage of 1-1. Chapter 11. How 1-1 improves entry quality. Most traders enter trades based on guesswork. They take random entries. They chase candles. They jump in because of fear of missing out. But when your target is 1-1, your entry must be precise. Your stop must be clean. Your analysis must be simple. This forces you to identify key zones, wait for confirmation, understand liquidity, analyze market structure, time entries correctly, avoid impulsive jumps. Over time, this builds a strong foundation. Your entries improve naturally. A trader with good entries can always grow. A trader with bad entries will always blow accounts, no matter what RR he uses. Chapter 12. Why 1-1 is perfect for intraday traders. Intraday traders rely on time. They need setups that close within the same session. They cannot wait for hours or days. A 1-1 is perfect because it closes faster. It has higher success probability. It avoids overnight risk. It avoids news volatility. It keeps your mind fresh. This is why scalpers love 1-1. This is why session traders love 1-1. This is why institutional intraday traders love 1-1. It keeps the workflow stable. It keeps the mind healthy. It keeps the account safe. Chapter 13. A practical example you can write on a whiteboard. Suppose you take a trade on NAS 100 during New York session. You risk 30 points and aim for 30 points. The volatility of NAS ensures that 30 points is realistic. You enter at a retest. Price moves slightly. It gives you small rejections. And then in 3-10 minutes, boom, take profit hit. You close your chart. You feel confident. You feel in control. You do not experience emotional burnout. You do not suffer from greed or fear. Now imagine instead you were targeting 1-3. You would need 90 points. Price may move 50 points and reverse. Your 1-1 would have been hit, but 1-3 gets ruined. This happens every single day. The difference is not strategy. The difference is expectations. Chapter 14. Why 1-1 makes you a long-term survivor. The goal of a trader is not to win big. The goal is to stay alive long enough to learn, adapt, grow, and succeed. A 1-1 trader survives market uncertainty, emotional pressure, bad conditions, drawdowns, news volatility, prop firm rules, psychological burnout. Survival is the real success. Growth follows survival. But without survival, growth means nothing. 1-1 makes you a survivor. Chapter 15. The concept of momentum microcycles. Small moves happen in microcycles. Markets create short impulses followed by retracements. These impulses often give clean 1-1s. Big moves require macrocycles. These cycles require trend alignment, session alignment, fundamental alignment, volume alignment, market sentiment alignment. A beginner cannot manage all this complexity. A 1-1 trader doesn't need to. They focus on the simple microcycles. They win more consistently. Chapter 16. Why 1-1 reduces greed and fear. This is one of the biggest psychological advantages. When your target is small, Your greed has no time to grow. Your fear has no time to take control. Your mind stays neutral. You stay detached. You avoid emotional paralysis. Both greed and fear disappear when the trade duration reduces. The quicker the trade ends, the healthier your psychology stays. Chapter 17. But can you get rich with 1-1? Yes, and here's HOW. Here is the unexpected truth. Professional traders get rich not from big RR trades. They get rich from lot size adjustment, account scaling, compounding, position sizing precision, funded accounts, multiple account diversification. You do not need big RR trades. You need consistent, predictable trades. Even if you make 2% a week, you can scale beautifully. Funded accounts amplify small percentages. Consistent one trading makes scaling possible. This is how professionals grow wealth. Chapter 18. Why 1-1 is perfect for beginners. If you are new, you don't understand structure deeply yet. You don't understand liquidity traps yet. You don't understand trend exhaustion yet. You don't understand volatility flows yet. So choosing 1-3 is unrealistic. Choosing 1-10 is fatal. But choosing 1-1 gives you clarity, confidence, control, stability, practice, skill development, emotional maturity. It is the perfect beginner's growth model. Chapter 19. The truth nobody wants to say out loud. Most traders who lose are not losing because their strategy is bad. They are losing because their RR expectations are unrealistic. A trader with 50% win rate in 1 RR will always survive. A trader with 20% win rate aiming for 1-5 will always fail. This is the bitter truth of trading. Chapter 20. Final message: the hidden power revealed. The hidden power of 1-1 trades is simple. It aligns with real market behavior. It fits human psychology. It reduces stress. It improves accuracy. It stabilizes emotions. It builds discipline. It protects accounts. It increases consistency. It supports funded accounts. It makes long-term success achievable. This is why professionals quietly use 1-1 consistently. And this is why most beginners fail without it. Ending message for your audience from Mr.TradingLab. Thank you for watching this full training. Here at Mr.TradingLab, my goal is not to motivate you temporarily or show flashy profits. My goal is to give you clarity, stability, and wisdom in your trading journey. Remember this always. Big RRs are exciting, but small, consistent wins build empires. A good trader is not someone who wins big. A good trader is someone who survives long enough to grow. Master the 1-1 mindset. Use it to build discipline. Let it strengthen your psychology. And once you are stable, once you are confident, once you are consistent, then you can explore bigger RRs when market allows. But until then, stay calm. Stay disciplined. Stay consistent. And remember, this is Mr.TradingLab, where trading is not gambling. Trading is knowledge. Trading is patience. Trading is clarity. And clarity always wins.